All right, let's jump into this. A lot to go over for this week. Wanted to get this done in the car, but wanted to get this done and out with time for everyone to review. So you're going to see a lot here. Don't worry about trying to follow all of it in the video because I do provide these screenshots. So obviously you can pause, you can take screenshots, but if you're checking this out on like Facebook or something, I'm also going to post the individual screenshots. All right. So I wanted to get this done real quick. So you had your watch list for the week. There's a lot I'm looking at this week. I want to give you a little background on what I do when I'm going through all this, because you're going to see lots of notes. And each one of these, they're set up the same. You have the monthly, the weekly, the daily, and then the hourly. So that way I'm getting a true sense of the move of the individual security, whether it's a stock or ETF over a long period of time. It also helps give me a sense of, is there confluence across time frames? Are we seeing that on the monthly, it's an uptrend, and also we're on an uptrend on the hourly? That gives me confidence that, we have trends, multiple trends are headed in the same direction. I also look at volume. One of the things that I left here on the weekly is more important. It's too crowded on the monthly. But on the weekly, for all the stocks we're looking at, these little symbols down here, these are all the earnings reports. So you can also get a sense of how's this company been performing going into earnings, because earnings season is obviously upcoming, starting this week with the banks. So I wanted to make sure you had that info as well. All the notes are here. I'm going to briefly run through each one of the symbols and just really focus on my favorites and why I picked each one. As well as my strategy to which options chains I pick. And then any questions you have, drop them in a comment, DM me, whatever they may be. Definitely creating this, to help others, to accelerate your learning, sort of the old, feed you while I'm teaching you to fish at the same time. I really wish that there was a mentor for me very early in my days when I was learning all this that would take me through this process. That was a more practical and hands-on approach. And I have something else fun that I'm going to be launching soon, which is a more interactive way to do this. So again, just, if you like what we're doing here, make sure you hit subscribe so that way you get updates. It also helps us know that we're providing value. Leave a comment. Want to make sure that, we're really delivering as much value as possible. Putting this all together took about 10 to 12 hours between the research, eliminating some of the symbols that I'm just not interested in, and then adding the notes to each one of these, researching the options prices. So it takes a lot of time to prepare this, and I do it because I genuinely want to help. It'll help me to understand through either subscribing and following that says like, great, this is working, people like it, or leaving comments to say like, this is wonderful, I've used this before, I'm going to use this week. So that interaction is really important. So Johnson & Johnson, UNH, United Health, these are defensive stocks. So defensive stocks are moving more into rotation now as people think about risk off. You can see that over the past couple of weeks, both UNH and Johnson & Johnson have started to move up. A few other symbols like Merck, et cetera, are also potential good plays. That's the only reason I'm really looking at these is rotation. I do have a couple of key levels that I mentioned here. The problem is sometimes these options prices can be really juiced. What I do like about J&J, so it's what I'm going to keep on my list, is that J&J crossing over this key level here between this zone of like 167.50 into 170. We cross through that. The options are really reasonably priced, where that $2 to $3 expected move will deliver 150 to 300% ROI. But expect it might take a day or 2 days to get there. It may not, really depends on where we are in the week. So pay attention to the major economic reports that are coming out. I'm going to go through that as well. There's also going to be a link provided in the description that gives you a link to my weekly setup. It includes all the earnings reports listed for this week before market open, after market close. It also includes all the economic calendar for each individual day. So you have that and you can refer back to it. So that's J&J. Don't really love United Health. Let's take a look at, I'm not going to trade IWM, but, IWM is the ETF for Russell 2000. A lot of the effects, they will tend to see the same effects here, they being IWM from the regional banks as it has exposure. Don't really like the options contracts. So not going to trade IWM, but did the review. KRE, this is a regional bank ETF as well. The only thing I like for KRE is just completely plummeting below 41. So we have a couple of regional banks reporting this week. If any of those banks really show risk and cracks where there's more to follow, and this breaks below 41, I will go short because this could hit the previous all-time low around 28 to 30. So that's a great move down if we see that break in any one of the regional banks. So I'll have that on watch. Then we have Wells Fargo, Bank of America. I'm sorry, Bank of America is not this week. And this is the trading journal, my trading journal watch list that I'm going to share so you have it. So we have Wells Fargo, PNC, JP Morgan. JP Morgan and Wells Fargo, the two big ones I'm going to watch. So I probably won't really trade these going into earnings, just because oftentimes these contracts can be really juiced going into earnings. I do like that we're showing a clear, potential breakdown. We've got the bear flag here on the weekly on JP Morgan. We've got something similar potentially forming on Wells Fargo. So I'll keep a clear eye, and I will update you throughout the week, Monday through Friday, every single day. How are we looking pre-market with the stocks I'm specifically focused on? Some of the ones that are here I won't cover on a daily basis. But the way I've been trading earnings, and I have this brief statement here so you can screenshot it as well, is because typically you trade a stock going into earnings when there's consistent growth and reliability. But right now there's so much volatility, it's not worth it. You're more likely to lose. So what I've been doing is I will wait until the report actually comes out, and then I'll determine whether the investment's worth the time. And doing that over the last 3 months, I had a 10x on Meta, a 30x on Apple and JP Morgan, because they also happen to report the day of expiration. So I use 0 DTEs. So there's a great potential return, and I'm not taking a lotto or a straddle where I'm hoping it's going to go in one direction or the other. I did review the oil stocks again. I'm not going to trade the oil stocks unless they break. Like ExxonMobil has this gap. If ExxonMobil with volume jumps into this gap, I do like the options contracts, so I might take a short. But other than that, there's the OPEC report on Thursday. We have the oil inventories again on Wednesday. So I'm okay with waiting for the OPEC report and taking a more reliable trade coming out of that. In ExxonMobil, I've also reviewed Oxy and FANG, all three of which are good opportunities, but I'm going to wait for OPEC. So some of my favorites, and I'm going to move them up, like Amazon and Google have been two of my favorites. Combination of just reliability in the way they move. They tend to be, even though they're mega caps, they've tended to move more like high beta stocks. So you're getting more of a move intraday. They really respect the levels. Because they're at the $100 range, it also makes the entry much more accessible for small traders. And even on like 4 or 5 days or 2 weeks out from expiration, they really perform well as a combination of the cost of the options contract and then the delta. So for every dollar expected move, you're really getting a great return. And I've seen some really wonderful returns with Amazon and Google over the last couple of months. So with Amazon and Google, they're definitely on watch. I've explained here what I'm looking for. With Amazon specifically, what I'd love to see is it hold above and retest this 102. If it does, I'll take a day trade, knowing that this 104 area is going to be a key area for resistance. My big position will be a break above and retest to 104 with price targets of 106.50 and then 110. So those are my two main moves on Amazon. Obviously, it breaks down. If it breaks down below this trend line, I will go short, but I'm going to look for it to break 100 because this trend line is right around 100.50, which it's respected and bounced off a couple of times. But I want to see it break 100 if I'm going to go short on Amazon. And then for Google, we broke through finally, like some great trades this week, and finally broke through that previous like multi-day high, which was 106.50, went all the way up to, what was our high? I think it was almost 110, like 109.50. So what I'm going to look for Amazon is potentially, like with a strong market, to come down, retest with what's called a stopping candle. That means like, see this candle here has like really big wick down. You'll see that sometimes when you look at the 1, 2, or 5 minute, where a price will touch a zone and jump, right? Immediate wick up or wick down. That's what you're looking for. That's a stopping candle. You can wait for it to close. I will look for that immediate jump up and I will enter that off that 106.7. I'll look for a break above the previous high to go long again and hold. If I enter the 106.7, I'm going to get out of most of my position when we get close to this 103.50 to 109, which was the previous high that we hit on Friday. Otherwise, I will look to go long again once we pass that and turn that 108.50, 109 into support. So love Amazon and Google for the week. I'm going to move this down and run you through how I use NASDAQ futures and SPX and ES to find key levels on SPY and QQQ later. So Meta, don't love Meta as much. It's a little pricey going into this week. The contracts are a little juiced. We do have this major level that we've tried to break multiple times. We closed at 216, which was great showing. We do want to close above this key level. So I could go long with Meta. We do have a pretty long way to go up to, I think it's 235. What I really like with Meta is this big gap to fill at 250 to 316. So 248 actually to be exact to 316. So I'm going to look for Meta is like some intraday trades or weekly. I don't like anything. I'm not holding anything overnight right now, so they're not swings. But intraday trades where we open up, as an example here, we might open up on the hourly above that 216 level, come back and retest it with a stopping candle and go. I would enter a single day trade, like either at the money or one out of the money call. And I would exit as we approach that previous resistance close to 220. AMD has been a great stock respecting levels similar to Amazon and Google. It's one of my favorite for the same reasons. We look like we really want to break down here on the weekly. We dropped a couple of key levels last week. We broke 98.50, we broke 97, we broke 95, we broke 93. Now we're holding below 93 and we tested 90.50 to be exact. So what I'm going to look for AMD is to give us clear direction. I'd like to continue to see downside, which proves that we've broken structure, because if we break 90, then our next major level is all the way down to like 78 to 80. So what I'm going to look for is how we open up. If we open up below 93, I'll look for a reject of 93. If we open up weak all the way down below 91, 90.50, I will wait for the break below and retest. I might take a small position on just a break below if we break below 90, but I'll be prepared because sometimes it'll just bounce right back up on us. So you have to be prepared to get out of those trades. I will do that, but the most reliable, highest probability trade is to break below 90, retest, and then shoot down. That's what I'm looking for AMD. NVIDIA, I think, is overpriced. I mean, look, it's at a level where it's got a lot of room to run, and then it's approaching like this range of getting back into approaching all-time highs, around 350. Obviously, we're far away from that, but it just keeps pushing through. I mean, I think it's overvalued and overextended, even though when we look at the hourly, like the hourly is coming out of an accumulation phase, but on the weekly, we've already pushed out of the accumulation phase, and I expect us to hit like we're in supply. We're going to start seeing rejections. We could go higher. It's just not my favorite pick. I do love Apple because Apple's contracts are so reasonably priced and it's moving well, better than it's ever moved lately. And that's also because we're getting close to those all-time highs around 182.94, 183. Obviously, we're still, 10 to $15 away, but we're approaching. So with Apple, what I'm going to look for is that break above 165, hold it. And then I'll go long, potentially 170, maybe 168 to 170. We have this zone up here, this upper end of this channel that we're in, which was created on the daily. So I'm going to be aware of that in terms of potential rejection up around 168. And then if we do pull all the way, which I don't expect, if we do pull all the way back down to 160, I would consider a bounce. But at that point, like if you look at what Apple's doing right now, we've broken structure. Right where we finish, we have these higher highs, then lower high. This to me on the hourly, this to me looks like a break of structure. So as much as I kind of love Apple long, they are reporting earnings in the 26th, which is going to be not this week, not the following week. It's going to be the following week, Wednesday. So it'll be 2 weeks from this coming Wednesday. But Apple's one of those where it's obviously been like level to level. Looks like it wants to break out. If we look on the weekly, like clearly we have this, looks like a head and shoulders, and we're breaking through these key levels. So on the weekly, this is my challenge. On the weekly, we look strong. Last week looks like a consolidation, and we're ready for a bull flag breakout. look like the same on the monthly. On the daily, we're not looking the same, but I'm okay with that just because, this bull flag on the weekly and monthly could be a strong position. On the hourly, you see I was giving us a different view and it looks like a break of structure. And that's why it's really important to have these different views, because if I just look at the hourly, I'm going to be bearish. If I just look at the daily, I'm going to be bearish. When I look at the weekly and monthly, it opens my perspective. And now I'm looking at Apple and saying, okay, it's been strong. It's announcing key areas of entry into the market, everything from like AI to competing with the metaverse, et cetera, which you may think is good or bad. But the whole point is you have to zoom out. And then when you zoom in, it gives you a different view. And I will update these on a daily basis as we go into this week as well. So we have levels. Then we have Microsoft, really similar. Microsoft has been really strong. What I do like about Microsoft is confluence. So what you don't see in Apple is confluence across all 4 time zones. What you do see on Microsoft is monthly, weekly, daily, hourly, all looking strong, all making higher highs. I like Microsoft better than I like Apple for a break above 292, potentially retest to 290, but don't want to see it go below because that's previous resistance turned into support. What I'd really like to see is it open up above 292, come back, retest, and go long. Really like Microsoft because of the confluence between the 4 time frames. I do not love Tesla because Tesla is a pig on crack. Probably not the best example, maybe a cat on crack. Choose whatever you think is fastest. I mean, this thing moves and moves quickly. We do look like we're starting to break structure on Tesla as well. We could, obviously with Tesla, you can always move up. You will see that on all 4 time zones, we do look like we're moving down. And, Tesla just reported that they're lowering prices again. So you can trade Tesla. I don't love it. That's why I don't really cover it on a daily basis, because I just think there's too much going on. So I am going to jump into, since they're here, how I use NASDAQ really quick. This is NASDAQ and ES. Actually, you know what? Let me move these around. I'm going to come back to those. I'm just going to jump down here and get to those last. So we have Intel, which has been really slow in trying to break out of this accumulation at the bottom. When it does, it's going to move. It's not going to move until, because it keeps testing and breaking down, it's not going to move until it breaks 35 based on what I'm seeing. So I'm going to look for that break above and hold, not just a 34, but a 35. For Intel, I love Walmart for this week. Really strong, confluence on all the levels, about to approach an all-time high, which is this dotted line up here. It's a defensive stock that also performs well when the market's growing because of e-commerce and people do spend. So I love Walmart going into this week. Target, not as strong, doesn't show the same confluence. We are in accumulation here on the weekly and on the monthly. You can see that we're in that accumulation as well on the daily. Like we might want to break out. I will look at target above 168. Don't really love it at 165. We'll look at it at 168 because that gives me more confidence in the trade. If the market's overall strong, I might take a small position if it bounces and gives me a stopping candle. But overall, for me, the 168 push is more interesting. Disney, again, accumulation on the monthly and the weekly. We're seeing, you can see the accumulation and it looks similar on the hourly. Like we want to break out, and we're right below this 100. It's why I do actually like Disney for this week, which is a break above and a retest of the 100. Not my favorite pick of the week, but it is one of the ones I will have on watch for this week, especially with their lineup. Disney is always performing well, especially going into like holiday time and summertime. So interested to hear their earnings, even though those earnings aren't for another month. So let's see how they perform in the interim. Maybe they just continue to chop, but I'll watch it around 100. Netflix, don't really love Netflix, honestly. It's just not a stock I trade that often. You can see that it just doesn't look like a whole lot of confluence. So I looked at it, but don't love it. Costco, I do love Costco at some point. This thing is going to break out. It's been squeezing for 4 or 5 months. It's been squeezing since April of last year. So it's going to want to break. For me, it gapped down to 480, the bottom of this zone. So we might see a gap filled down. Don't panic. But I'm going to wait to see how it reacts at this 487, which is also the volume point of control. So I might take a really small position if we gap down, like very, very small for a long, expecting us to bounce once we fill that gap. So gap and go back to the top of the range, but very, very small position. So if your average position size is, let's say 10 contracts, I would take like one, being prepared for it to completely go against me. Other than that, I'm looking for the break above this 511 or the break below for it to clearly give us direction. And this should be a really big move considering it's been squeezing on the monthly and weekly. So we expect this to be a pretty darn big move, going all the way back down to testing this 450 area if we break down. And if we break above, you know, up to testing back around these highs, which is like 530 to 540. Merck, we already talked about. Merck, look, I don't really trade Merck. I don't trade Lilly. I took a look at these mainly because the defensive stocks are performing well. Obviously, you can see there's a bit of confluence on the 4 charts. I will cover these this week, and you'll have the information here, but I'm not a big Merck and Lilly person, just on my day-to-day trades. But if we really rotate into defensive, those are going to be 2 potentially interesting names. The other thing is McDonald's. McDonald's has been kind of acting like a growth stock lately. I do like McDonald's, even though the options contracts are a little pricey. What I like about McDonald's is, like, once we break this all-time high, which is right above us at 284.98, right at 285, we have a lot of room to the upside and nothing that's really going to pull back on McDonald's. So if we do pull above that 285, I will go long on McDonald's. So I want to show you really quickly what we learned on Friday from the earnings, from the labor market reports. So you can see over here, these are futures. So futures do trade even when the market's closed. You can see that QQQ didn't really do much, stayed range bound from Thursday, didn't do a whole lot, you know, pulled up a little bit. Obviously end of day Thursday, this is end of day Thursday, this is Friday, so stayed pretty flat. Then SPY moved up a little bit. Remember that SPY has some of the big defensive stocks like United Health, UNH, Johnson & Johnson, J&J. So it's going to benefit from those moves. So I will use futures when the markets close. I want to run you through really quickly how I use SPX and ES to set my levels on SPY, because as an example, like, you might look at SPY last week and say, like, why was 406 such a big area for a bounce? It was because it was 4,000 on SPX. So you've got to watch 4,000 on SPX. You've got to watch those big numbers in ES. The great thing when they line up is that's even more strength. They don't often line up. 4,000 on SPX, 4,000 on ES, and right around 400 on SPY are lining up for this week, which means we see some other confluence in other levels like 4,100 as well for retest and go. So that's how I use SPY, ES, ES, which is the S&P futures, and SPX for SPY pricing. And then I do the same thing for NASDAQ, NQ, and QQQ. So if you want more information on this, just drop me a line and say, like, Dave, can you slow down and explain how you use NASDAQ futures for QQQ levels, and then how you use SPX and ES for SPY levels. So in terms of SPY and QQQ, honestly, you can see what we look like. We have here, we've got a cup. We have the ascending, what you could call an ascending triangle, because we have, you know, we're testing this level and we're pushing up. So everything about SPY looks like it wants to push up. We've got confluence on the monthly, the weekly, relatively on the daily, although we want to see it really push back up and break through this 420. That's going to be the big area. So I'm just going to wait for the levels and see what they give us on a day-to-day basis. That's what I'm going to do with SPY and what I'm going to do with QQQ. As much as I see the setup, the reality is we could wake up, get a report, and be down 3% in the morning, and all these levels are blown up. So I'm going to run through these at the beginning of each day, the main stocks to watch. Again, hit that subscribe, leave a comment, tell me what else you'd like to see, any stocks you'd like to see me review, any questions you have. I know I move kind of quick. I will drop the screenshots in one of the other social media platforms, because you can't do that on TikTok and YouTube. You just want to download the screenshots and have these available. And then you'll also have the link to the trading journal, which I showed you, that has all of the earnings schedules as well as the economic report for the week.